Well, today we're going to be meeting with Doug Dale from Goosehead Insurance and talking a little bit about some of the property and casualty insurance rules. My name is Kristian Bezeau. I'm with Union Home Mortgage here in Michigan and Ohio, and wanted to share with you some different ideas on some financial products. In the future, I'd like to do some more videos with some more professionals to help share some information and provide some things of value to everyone out there. So if there's something that you'd like to see in the future, send me a message, or if you have some questions, drop either Doug or myself a message and we'd be glad to help. So Doug, if you want to introduce yourself a little bit, tell us a little bit about yourself, something about Goosehead Insurance, and the floor is yours.
Great. Well, thanks, Kristian. I appreciate this. I think that it's important to do these kinds of things. You know, a chance to learn about both mortgages and insurance is pretty critical. My name's Doug Dale, and I recently started the Goosehead franchise here in Michigan. And, basically because I saw a need. And I've been a real estate professional for a long time and have noticed that there's a gap in insurance, and insurance is a lot more complicated than it used to be. And so I've had experience in other kinds of insurance, and recently jumped in with Goosehead. I found that this was a great way to be able to market several different insurance companies. And so Goosehead is afforded me the opportunity to fit people with the right kind of insurance. So we started just here recently, and we're taking Michigan by storm.
Right. Well, that's great. And I appreciate you coming on here today and sharing some of your ideas and thoughts with us. So something that I've always wondered, doing mortgages, I work with a lot of first-time home buyers. Is there something that you can give a home buyer tips to maybe prepare for, something they need to get ready for? Because I know, like with mortgages, they really need to prepare their credit, make sure they're getting all their ducks in a row. What kind of advice would you give for someone that's going to be purchasing in the near future?
Well, that's a good question. First-time home buyers, they go through and they're buying a house, and then they need a mortgage, and they get a mortgage, a loan officer, and all of a sudden at the last minute, somebody says you need insurance. And so the first thing they do is they either go with whoever has their car insurance, or more often than not, who do their parents have? And insurance is a big part of home buying and making sure that you get the right insurance. And so being able to sit down and talk to somebody about the kind of insurance that they need, what the coverages are that they want. They need to understand that their insurance score is based on their credit. So just like a home score, your credit is a big part of what goes into purchasing insurance, as well as how many claims they've had in the past. And so if you're a first-time home buyer, you want to be a home buyer in the next couple of years, believe it or not, having an accident with your vehicle can actually cause your insurance to go up on your house. So drive safe, don't get speeding tickets, and then the process of buying a home. Not all homes are equal. For example, how old is the roof? That's something that the insurance companies look at. If your roof is 20 or 25 years old, some insurance companies actually won't cover you, and it excludes you from that, or they do an exclusion on the roof. What kind of siding does it have? How many fireplaces does it have? All of those are things that go in. Now, still, you want your perfect home, the home that you want, but all of those things are important when you're looking at it for an insurance. And the other thing is don't get a trampoline if you want your insurance score to go down. If you're going to get a swimming pool, if it has a slide or a diving board, that's going to cause some things to happen with your insurance costs. So those are all things to think about. If you're really close to margins, those are some things to think about too.
And I think a lot of people get those things without thinking about it. Because I'm assuming if they have some kind of a claim, but they don't have a coverage for that, that could cause themselves some kind of financial difficulties. Would that be
Sure.
it covered if someone had a trampoline and they didn't have that as a policy rider or something on that?
Well, that's an interesting question. I'm not going to say all insurance companies, but a lot of times what will happen with an insurance company, if somebody buys a trampoline and they didn't report it to their insurance agent, most likely that person would be covered. It's a liability typically kind of coverage if somebody gets hurt or something, and it would be covered under the insurance. The next thing that happens though usually is not the fun part, because that's usually when you get a notice from your insurance company that either they're raising your rate or that they're going to completely take you off their insurance.
Right.
So your best bet with insurance, honestly, is to be honest with what you have. And some people want to not talk about certain things that they have or they do. If you have a dog, the wrong kind of dog, your best off is to tell the insurance company, because then you're properly covered, and it's not going to affect your insurance in the future.
I think a lot of first-time home buyers don't know. They're not trying to hide something. They just think, I bought this house and I want to add a pool or a trampoline. We're going to do all these things that we have, and they don't have an agent that says, hey, come back and tell me the changes. And that kind of goes into my next question, is how often should someone come back to their insurance agent and talk to you about possible changes or upgrades to their policies? Obviously, they're going to want to have, a call if they have a question to you, but how often should they review their policies to make sure that any holes are buttoned up?
Yeah, that's a really good question. A lot of insurance companies want to do, an annual review, kind of like an insurance birthday kind of thing, where you get together and you review your insurance policy all the time. I have a little bit different take on that. I believe that you should have a relationship with your insurance agent, because things don't just change in our life once a year. And so being able to have a conversation with your real estate, or I'm sorry, not your real estate, with your insurance agent is pretty critical. And if you want to get a trampoline, that's one thing. But if you want to, put an addition on your house, if you have, a new addition to your family, these are all things that you want to talk to your insurance agent. It's kind of interesting. In Michigan, we spend about 15 to 20% of our income on insurance. That's a big portion of our income that's on insurance. And yet, most people have been taught to just buy the cheapest insurance they can. And insurance is just like anything else. There's a value conversation that goes with insurance. And if your agent doesn't know you, or if you're going online and buying your insurance online, you might be in the wrong insurance, and you're not getting the value out of the money that you are going to spend.
Right. Is there something in particular that someone can do? Should they contact you like 6 months before they're trying to buy a house? Even before that? Obviously, getting their credit score as high as possible for when they go run that insurance quote is important. But is there some kind of steps that they can do if they say, I'm going to buy a house next year in July? Is there something they should talk to you about, or some kind of information you can provide to them to give them some insight on something?
Yeah, so it's interesting part about this business. Insurance companies change, and they change who they can insure and how much it costs it's going to be. But as you're getting ready to buy a house, and for example, I want to buy a $300,000 house, or I want to buy a $200,000 house, I can give you, or an insurance person can give you, a general idea about how much that insurance is going to cost.
Mm-hmm.
But We can also point you to the fact that if you buy a house, for example, in the country, if you're a certain distance away from the local firehouse, that means it's going to cost you more money.
Right.
So if you're already stretching your budget to the top, and you go buy a house or you put an offer in on a house, and you're working with a loan officer like yourself, and you're trying to do the best job you can to get them the best rates you can as far as within their budget, and then all of a sudden they go to get the insurance
Hey.
and puts them outside the margins, and now they can't get that house.
Right.
So knowing that, and where you're looking and understanding what that means is very, very important in the whole purchasing process. And sometimes what happens is people will just squeak by and get basic insurance and don't really get their coverage they need. And so you're exposing yourself there too.
Right.
And so having that conversation that says, this is what you need, this is your assets, so you want to make sure you have your liability coverage right, and that you can get the right kind of insurance.
Right.
I think that's part of that ongoing relationship. Now, good news. You buy a home, you're going to get a discount on your auto.
Right.
So that's going to help you. But, I think that conversation and using, if you start seeing that your relationship with an insurance guy and your loan officer person, and they have a relationship, you can start working all together. And I think that's important too.
Yeah, because really, traditionally what's happened is I'll have someone come in and they'll have a pre-approval, then they get an accepted offer, and I tell them to start shopping for that homeowners insurance. Really, if you have a good relationship with an insurance guy like yourself, I call and say, okay, have them tell us right now, but even before we do the disclosures, because I'm going to try to estimate high, but like you said, sometimes they're buying a house that's just in an area where the insurance is just more expensive than what you would normally expect, or they come back and they want to cover, huge collections of items, and their insurance premium is double what someone else is because they want it to be and they need it to be for reasons that customer A, B, and C might not have, but they're customer D and they have different reasons. That will impact your mortgage approval.
Sure.
So, and people don't realize that, and a lot of times realtors don't realize that. We are putting a certain amount in for principal, interest, taxes, insurance payment, and if we have a large change, and I've had some people get a quote, and then we go to get the insurance, and it's 50% more. So that can cause a closing issue. So it's very important that people talk to you early on, have an established relationship with someone while they're shopping or before they shop, so that they can call and say, hey, I'm going to put an offer on this house. Can you give me some kind of an idea in the next couple of days of where you're sitting for a premium? Then when they're talking to me, I can put in something. I'm still going to estimate high, because that's just the way that I do it, to make sure that we have some cushion in there. And ultimately, It comes out whatever the cost is what we are. So
I can tell them in 5 minutes whether it's in a flood zone.
Right. Yeah, we do the same thing. Yeah. Yeah. And then flood insurance is a big expense in some places. So yeah.
It's also true. It's also true, Kristian, with refinances. Sometimes when you refinance a house and your insurance needs to be updated, that's when they find out that maybe there's some things that have been changed to the house or something like that.
Right.
And that's not a good surprise in the middle of a refinance to find out your insurance costs are going to go up.
Right.
But that whole conversation that you asked about how often do you check up with your insurance person, it's critical.
Anytime there's a change. Right.
Yep.
And then sometimes if you don't know there's a change, it's good you really need to reach out at least once a year. And don't wait till that once a year, but if you're not talking to your insurance, that's my opinion. You should talk to your insurance guy once a year. You should talk to your mortgage guy, your financial investments for whether it's retirement or finances, because people ask me all the time, I'm saving $150 on my refinance. What should I do with that money? Well, what do I do if I apply it to the mortgage? I don't know if that's the best thing, because if you're borrowing interest rate at 2.75% right now, is there something better that you can put it in there? Well, you got to talk to a financial guy, and then you got to talk to your CPA, because different things have tax ramifications. So if you're refinancing, especially investment property or purchasing investment property, you need to have a good relationship with a financial person, a CPA person, so they can give you both of those two different twists. And then a life insurance agent. A lot of people come to me and they want credit life, and it's not the best product most of the time for what that customer is, because they might have a $150,000 mortgage and their credit life insurance is X amount per month, but next month their coverage is only $149,900. So, and it goes down every single month. So most people can get a term life policy to cover that, if that's the only thing that they want it for. But maybe they have some other financial needs. So those are the 5 different areas that I'd really like to bring on and have conversations with people like yourself, so that people can realize that it's not all about saving money, but it's all about making sure that our future is protected, and thinking about that. Even just having that thought process once a year can really save you hundreds of dollars every month. And people don't think about it because it's not something that's always forefront of their mind. They get a bill once a year for insurance, and I bet you there's a lot of people out there that don't even open it because they have an escrow account. And open it. Call your person, ask them questions. If you had a driver that's no longer, they're out of the house or something, maybe you don't have to pay your insurance premiums that you were on your car insurance. So forgetting things like this can cost a lot of money. So don't stress out over it. But if you have the right plan in place, you shouldn't really be stressed over it. So, but now these are the times right now where people are saving a lot of money, and they're not. Many people are coming into a financial gain because of the whole COVID virus, and not everybody, but there are some things out there where people are getting the fortuitous advantage of because of the COVID. Interest rates are low right now because of that. I don't think they would be even close to what they are right now. But you never know, because just like a stock market, things are going to change on a daily basis. So what are some of the industry changes that you've seen that might impact some of whether it's on their homeowners insurance or car insurance, anything from the property and casualty side?
Well, I sell insurance in both Ohio and Michigan, but Michigan, I assume most people now know that there's a big sweeping change that's happening in Michigan with our auto insurance. Michigan's one of the few states that has no fault insurance, which is a little bit different than a lot of the states, so that the person, whoever gets in an accident, you basically cover yourself inside the accident. And along with that, there's what is called PIP, or personal insurance protection insurance. And recently, Michigan has changed some of the rules around that, and it goes into effect July 1st. And in the past, there's been a big fund, which is basically an unlimited fund for medical coverage. So if someone gets hurt, both for work loss and for medical, there was an unlimited fund to take care of that person off in the future. And this has created very, very high insurance rates in Michigan, one of the highest in the country. So the new laws actually allow people to opt out of that. And you can cap how much exposure you have. And there's different levels of exposure, either 500,000 or 250,000. And even some people can completely opt out of it. And this is the kind of conversation quickly you need to have with your agent. It's coming quickly. And honestly, there's a lot of confusion around it. So the agents that haven't spent the time to go figure it out, find an agent that's figured it out, because there's a lot of complexities with this, and it's going to affect everybody. And I'm encouraged the fact that it's going to affect most people in a positive way.
Right. I know a lot of people just look for that premium refund, and this legislation is something that that has brought a few questions to me from a few customers, and I just tell them they have to talk to their agent because it's not something I'm versed on. But it might not be something that they want to get that premium back. They have to make sure they understand the give and take of that. So, so can you tell me a little bit more about, so what would it mean? I guess what would the risk be if I was to get myself excluded from that coverage to save a little bit of money? What's the flip side of what is that coverage now not entailing?
Yeah, so the people that can get excluded actually are people that are in certain kinds of insurance. So if you're in Medicare Part A or Part B, or have insurance associated with the Affordable Care Act and those kinds of things, those insurance actually already fully cover you if you have a medical problem.
Mm-hmm.
That up to zero to unlimited coverage. So it's really more people that have your traditional employer covered insurance, or if you buy insurance in the open market, where most people don't realize, but there's some caps on health insurance.
Mm-hmm.
And so if you opt out of the coverage with your auto insurance and you're capped on your health insurance, you may find yourself down the road if something happens where you basically have run out of coverage. And that's, insurance is there to protect your wealth. And so making the right decision based on those kinds of things really needs to be a conversation, I think, with your insurance person, and also maybe your financial person, and how much you're willing to put at risk in your life.
Yeah, I would imagine you'd want to re-entertain that, like you said, anytime you have a job change or something happens, because if you go from employer-funded insurance to self-funded, like you said, caps change. So you may want to re-enter that coverage in there and pay a little bit extra per month.
For sure.
So I always see the commercials where people have saved X amount of dollars for switching to certain companies, and I always chuckle because why would they, unless the coverage was better, why would they switch? So, and most people are just looking for that savings, and they're not thinking about the backside of what saving $500 a year by switching to XYZ company can cost them in the long term. So definitely, I always caution them to make sure they're using an insurance professional. And I do prefer using someone that's local, because this is how I always am. I think that helps our economy. And then they'll have someone that they can put a face with a name and build a relationship long term, and be able to do something like that. So,
and I can give you, Kristian, I can give you kind of an example of that. We just went through a period of time when a lot of people didn't leave their house for a couple months. And if you had the right relationship with your insurance agent, somebody that's sitting there with 3 cars and only driving to the store once a week, and they're full coverage, full liability on their cars, a quick phone call to the insurance agent, and you literally could have suspended coverage on a couple of those vehicles and saved during this whole period of time, and just not driven the vehicles which you weren't driving anyway.
right.
And being advised of what that means and how to do those kinds of things, that happens with a local insurance agent.
Right.
It doesn't happen with a 1-800 whatever.
Right. Yeah. And I know a lot of people are talking like, hey, we're going to cancel this or cancel that. And I'm like, well, you got to be careful, because you could have, you can't cancel your flood insurance until you pay off your mortgage. Then it's up to you if you want to have it, but it doesn't mean you shouldn't have it. So those are conversations that a lot of people don't. They just want to save that dollar, and they can cause themselves a lot of financial hardships down
Sure.
the road. So yeah, and I appreciate the time you going into the auto thing, because that's something that I've had a couple questions on, and I know for myself, I heard some things about it and I have no idea. I'm busy trying to do everything that I need to do to keep things moving in my career, and mortgage business has been very busy, so I don't have that time to go check and see every regulation and stuff. So I definitely appreciate that. Thanks, Doug, for sharing that information today. It's very important, very useful. We're going to try to continue in the future by having some more videos of some useful information. If there's something that you'd like us to share or find some more information about, please comment below. And if there's something that you'd like to have questions answered about a mortgage, please contact me, send me a Facebook message. My email address is kbezeau@unionhomemortgage.com. That's KBEZEAU @unionhomemortgage.com. Thanks and have a great day.